Hey there traders, welcome back for episode number 124 from the StockBandit.tv. It's a place you can always find trading videos to make you better. And the start of each trading week here begins with a look at the major averages. We know that those important levels that the indices are starting to respect will really carry over and impact most individual stocks and how they move. So this is where our week begins, right here with the indices. Well, last week we had a holiday shortened trading week, only 4 sessions, but in spite of that, the uptrends continued. We saw new highs created in the S&P and Dow, while the NASDAQ just continued to kind of move sideways. Each of the indices did tack on some gains, but more importantly, these uptrend lines off the February lows played catch up. And by that I mean all this horizontal price action that we've been seeing in price has allowed these rising trend lines to finally catch up with price, and they did provide support last week. So let's take a look here. For the NASDAQ, previously, this index has gotten somewhat extended when you compare price to this uptrend line. Now, at times, price has met this uptrend line and it has been respected, but more recently, price was getting kind of extended from this trend line again and started moving sideways. Now, this uptrend line has caught up and is really being validated with last Thursday's touch of that level, which is 2383. Now, the highs are still intact here for the NASDAQ, which currently stand at 2432. These are the two levels that I'm watching. I'm watching this 2383 level where this uptrend line is, and I'm watching the highs at 2432. Until we break one of those, we can really probably expect more of this sideways choppy action. But all in all, for this index to simply be moving sideways for several bars, the way that we've seen here on the daily chart, is very healthy to see. It really kind of works off the overbought condition, and now it kind of paves the way for this uptrend to continue if the buyers want it bad enough. For the S&P 500, we saw this index really kind of pull back and get very close to this uptrend line last week, and then turn higher once again on Friday and just fractionally make a new high. It cleared the 1180 level by about a point, so we've got the highs at 1181. We've also got this rising trend line at about 1165. So, here again we're largely range bound for the last little while, but strength is starting to step back in here, and looks like this index is going to be free to move higher if the buyers can, of course, produce that. Now, these two parallel trend lines have been marking the pace of this advance all along. Each time that we've gotten to the lower end of this, we've worked our way back to the upper end of this. And so now that we've tested this lower end, the question remains, do we rally right back up to the upper end of this channel? Well, this channel is about 35 points wide. If you were to take any level here on the channel and compare it to the lower rising trend line, that's about a 35-point difference. So that would take this index to about the 1200 level if it shot up quickly from this 1165. But no predictions here. Currently, we're just riding this uptrend, and it's just an uptrend that we need to certainly respect as we watch it continue to unfold. For the Dow, this index was able to put in some horizontal price action last week. It tacked on only about 77 points. It did make a fractional high, new 52-week high on Thursday, simply clearing the prior high by about a point. We've got this rising trend line right in here about the 10,850 mark, and then we've got the high set at 10,956. So here again, uptrend still intact, rising uptrend line really providing support here. So let's see what that means in the week ahead. Thanks again for joining me for this episode. I will have more videos here for you soon, but in the meantime, trade like a bandit.